Welcome to Industry Focus, the podcast that dives into a different sector of the stock market every single day. Today is Wednesday, October the 16th, and we're talking healthcare. I'm joined by healthcare guru Todd Campbell. I'm Shannon Jones. Todd, how's it going?
I'm doing well, and as always, looking forward to a packed show today with all sorts of great healthcare updates.
Oh yeah, we're going from small biotechs to big health insurance and big pharma as well. So we've got a lot of ground to cover. But let's kick things off with a company we actually talked about last week in our Beaten Down Biotechs episode. Certainly check it out if you haven't. But that company was Regenxbio. That is ticker symbol RGNX. And last week we mentioned that Regenxbio was going to be presenting updated data for its drug candidate RGX-314 at a medical conference in San Francisco. Well, we got that data last Friday. Todd, before we get into the specifics and what we saw, let's just do a quick recap for any new listeners out there. What exactly is RGX-314 and what is it attempting to solve for?
All right, so this is a gene therapy, and the goal here is to design a better way to treat patients with something called wet stage age-related macular degeneration, and we'll call that just AMD. And AMD, wet AMD, is not uncommon. It's pretty common, especially as people get older and live longer. We have, if you look at the statistics of this, you've already got between 1 and 2 million people with wet AMD in the United States. I think 3 million maybe within the developed markets. And it's a multi-billion-dollar blockbuster indication already that's being addressed by Regeneron, which has a product called Eylea, and Novartis, which has a product called Lucentis. And both of those drugs are $4 billion plus per year medications that people take to try and inhibit a protein and tackle what really is a breakdown in the macula. So it really negatively impacts the ability for people to see. They end up going, legally blind in their senior years. And while Lucentis and Eylea work pretty well, unfortunately, they need to be taken very regularly. I mean, you can take these things monthly. They can be every 8 weeks. They can be every quarter. I've had some eye stuff lately that I've had to take care of. And, I was there for multiple Thursdays in a row talking to this really nice gentleman next to me. He was there every week for an injection. So, there's definitely a room for improvement here. And what Regenxbio hopes to do is to provide a kind of a one and done option. So by delivering using its own vectors to deliver a very specific way of being able to inhibit that protein that is long lasting. And the data that was expected, really, I think, shined through. I think it was pretty solid. I think that the market reacted negatively because there was some competitive concerns from another company who reported numbers in wet AMD as well. But I think on balance, the data was pretty good. So Shannon, if you want to dive into that, we can go right ahead.
Absolutely. So looking at the data, and this was for an ongoing phase 1/2A trial in RGX-314. And what they saw, basically, the majority of patients, 75% or 9 out of 12 in one of the cohorts actually no longer needed injections. And those were those standard of care options that you mentioned, Todd, basically called anti-VEGF injections. And as you mentioned, they do have to be taken on an ongoing basis. And so it was those patients no longer needed the injections, but we also saw improvement in vision and retinal thickness, 2 important points. They also released data related to another cohort. This was cohort number 3. 50% of patients, or half of them, haven't needed those ongoing standard of care injections in the 1.5 years since taking RGX-314. And we also saw no serious side effects. I want to go back to the injection piece just to put some of this data in context. You mentioned that these patients often have to go to the doctor's office, get these injections into the eye on an ongoing basis. And really, in only about a third of these patients, is there any sort of improvement? Really, it's about stabilizing the disease. It's slowing the progression. But when you think about it just from I guess, a patient perspective, there's a compliance component that I think is one of the reasons why you don't see, I guess, longer term durability or even improvement, but it's because patients don't want to have to go into the office and get these injections on an ongoing basis. So to see data like this, where not only the majority of patients in cohort number 5 no longer need the injections, and we're seeing the durability of response, is actually quite impressive.
I think so. And I think importantly, you're seeing that improvement in vision as well. So it's okay, I'm maintaining my vision, but I'm also seeing some improvements in that cohort 5, which was the one that had the shortest timeline that they were being able to evaluate. I think all the patients were able to have at least 5 months of evaluated period. So 75% injection free at 5 to 6 month mark. The average improvement was 4 letters. And for people who responded, so the 9 patients who responded, the average improvement was 5 letters on an eye chart. And, that's pretty significant. I mean, you've now removed the need to have these regular injections, but importantly, you've also restored some independence and some freedom for the senior taking this, because they can see better and feel maybe a little bit more confident around their home and when they go out and about. You mentioned that this is a multi-cohort. That's because it was kind of dose ranging. We're trying to figure out the magic amount to be able to give patients. I think it's great that we haven't seen any serious side effects from increasing these doses, and we're seeing potentially even greater efficacy. I mean, even in cohort 3, though, you still saw a really, really big improvement in letters overall at the 1.5 year mark. And I want to say it was 9 letters. So it's going to be really interesting to see whether or not, over time, the letter improvement for this cohort 5 gets better or not. That's something to keep watching from here. This drug is not anywhere near approval. Yeah, they're thinking about starting a phase 2B trial soon. So you're going to need to wait for 1 year data here. You're going to have to get the 2B trial through. Maybe at that point they can sort of file to get this on the market. But we're still talking a few years out.
Yeah, and they also have a program where they're looking to study RGX-314 in diabetic retinopathy. That'll be a phase 2 trial that's scheduled to start toward the end of this year. But Todd, I mean, holistically looking at the data, things look pretty good for Regenxbio, but we actually saw the stock drop I think it was about 11% when they released the data. One of our followers, listeners on Twitter, Jonathan, thanks so much for tuning in with us, but he had asked, what in the world is going on? This looks pretty good to me. Todd, what can you tell us about, I guess, the market's reaction? Because it wasn't just about Regenxbio here.
Yeah, it's possible that some of the reaction was to some competing data that came out of Adverum Biotechnologies. Symbol there, I think, is ADVM. Correct me if I'm wrong there, Shannon.
That's correct.
Okay, great. Yeah, a relatively small company, and they're conducting a phase 1 study for their own gene therapy that works similarly. And they reported that of the 6 patients that they have dosed in that trial, at a median 34 weeks, there were none of them required anti-VEGF medication, so Lucentis or Eylea. So a lot of people may have looked at that headline and said, wow, at the 34-week, 100%, all 6 of the 6 didn't need to take these injections. That theoretically, in their view, is better, right? I mean, it sounds better on the headline. I think that once investors digested some additional data, though, from the trials and some additional information, realized just how limited in scope the trial is for Adverum, I think that, they kind of responded by bidding Regenxbio back up a little bit. But it's certainly something we're going to keep an eye on. We're going to watch Adverum closely from here.
Absolutely. So you've got a dueling gene therapy battle going on here, which I have to say, Todd, to even be having a conversation about 2 potential gene therapies that could not only stop the progression of the disease, but actually improve quality of life is just incredible to me. The innovation in the science and just where we're moving in the overall healthcare landscape is just amazing. But a lot to watch because just like you said, it's still early on Yes, it seems like the stuff of science fiction, but it's here. So with that, let's turn and shift gears, because we also got third quarter earnings from healthcare titan UnitedHealth Group. That's ticker symbol UNH, and that is parent company of the nation's largest health insurer, UnitedHealth. Todd, I know health insurance stocks this year have been a little bit beaten up, especially as we head into election season. But just in terms of earnings for UnitedHealth, how did they fare?
I thought it was an incredible reaction in the market. I don't know the last time I saw United Healthcare actually rally 8% in one day. And I think the excitement was, driven by the fact that they beat both on the top and the bottom line. And maybe some of the commentary in the transcript seemed to think, okay, listen, we're pivoting and we can handle whatever the political outcome happens to be, is basically the message they were trying to convey if you read between the lines in the transcript. As far as the numbers go, like I mentioned, they beat on both the top and the bottom line. They reported revenue of $60.35 billion. That was up 6.7% year over year. That was a beat of $510 million. Their net margin did tick up a little bit overall as a company. It rose 0.3% to 5.9%. Again, insurance business is not a very high margin business, so that's solid. And their non-GAAP earnings per share, so the adjusted earnings per share, was ahead of expectations by 12 cents. They reported $3.88. So that brought the year-to-date revenue to $181.3 billion, up 8% year over year. And importantly, Shannon, they also issued some guidance that looked pretty good on the bottom line as well.
Exactly. They raised full year guidance to $14.90 to $15 a share. That's about 15 cents higher than some of their previous forecasts. But I think, Todd, when you kind of peek under the hood a little bit, of course, you've got UnitedHealth, their insurance platform. But really, I think the star of the show this quarter was the Optum Health Services business. Looking just, high level across each of their business lines, you saw double-digit revenue growth, which is pretty impressive.
Yeah, Optum is the star, no question. Insurance business is mature. It's not going to grow. It's dependent largely on premium increases to grow that business. I mean, how much lower can unemployment rate fall? So, they get a lot of business on the insurance side and serving commercial, so company offered insurance plans. They do a lot of business in Medicare, and they do a lot of business in Medicaid. We can talk about that in a second. And then, of course, they've got the Optum business, which is kind of their high growth business. And they have different components within Optum. They have Optum RX, which is their pharmacy or their drug fulfillment arm. They have Optum Insight, which is kind of a data analytics play. And then they have Optum Health, which is, where they provide care and behavioral health services to patients. And those businesses are growing, very quickly. I think we saw better than 13% year over year growth in Optum. And we saw, like I said, about 4.5%, something like that, in the insurance business. And I think, if you look at the top line numbers and you're wondering why they don't add up, okay, so the insurance business was $48.1 billion in revenue, and the Optum business was $28.8 billion. That obviously is greater than the $60 billion headline number. That's because there's some offsets between those two businesses. So Optum provides some services to the insurance business, and you got to offset those or even them out, net them out when you're reporting the top line number.
Yeah, I think one thing in listening to the call, one area to watch, especially heading into 2020, in UnitedHealth, they do tend to be pretty conservative with their guidance, but they did say they expect adjusted earnings per share growth to be around the lower end of their typical 13 to 16% goal. And that's not including the impact of any sort of return of the Affordable Care Act health insurance tax being reinstated that was suspended. And they basically said that tax would affect EPS by about 50 cents, with 35 cents of that weighing down results into 2020. I think that'll be something to watch, but, for a company, and you said it very well, Todd, they've been able to adapt really to any sort of political climate, any sort of healthcare climate. I think the one other big question mark is, of course, all of the talk about Medicare for all.
Yeah, I mean, Medicare has been a very, very big component or part of their story for growth. I mean, yes, the employer and individual market did well. They did they did 14 billion, in premium revenue from that business. That was up 557 million, and they added about 1 million lives in coverage, the employer individual market. But if you look at the Medicare and retirement business, revenue was up double digits, 10%, almost 2 billion to 20.7 billion. So they're making more money in the Medicare business than they are in the employer business. And, we've got a larger aging population because of baby boomers retiring. And you're seeing a greater and greater push towards Medicare Advantage because you have things like, caps to your out-of-pocket spending, which you don't have at traditional Medicare. I think there are some signs, some cautionary flashing yellow signs I think investors need to be worried about. I think, the 8% rally may have been some short covering. Rather than necessarily people going out and saying, okay, yeah, I'm going to bet on this long term, because we do have some we have some threats. I think if you're going out and you're buying the stock, you have to kind of assume that if the Democrats who are running on Medicare for All, if they win, then the way that it'll finally eventually shake out won't be a traditional Medicare, but a opening a Medicare Advantage up to everybody. If that were to happen, that would be great for UnitedHealthcare, right? So that's one assumption that you might have to make. I think the other assumption you have to might make is that we also remain fully employed, right? Because obviously if unemployment starts to rise because of any kind of economic deterioration, then you're going to see their employer business start to contract. And then you've got to watch closely the Medicare business as well, because the Medicare business actually is down year over year. It fell to 10.7 billion. It fell about $380 million year over year. And that's because they're covering less people. And, part of that is by design, because they exited one state where they lost a bid or chose not to participate. But it's also they've cited the fact that the eligibility requirements have tightened. And as a result, less people are being able to participate in the Medicaid program. So, I think if you're buying it, you're assuming that Medicaid's going to stabilize, that Medicare Advantage is going to end up, being probably the best vehicle for Medicare for All. There's still some question marks.
Yeah, still some question marks and a lot to watch. All right, let's dive into Pfizer. Pfizer, and that's ticker symbol PFE, announced results from one of its phase 3 clinical trials, affectionately called the Jade Mono 1. That's pretty fancy, Todd, I think, for its drug abrocitinib for severe atopic dermatitis at a recent medical conference in Spain. Pfizer is basically hoping to get its drug across the finish line to become the first oral once-daily treatment option for patients. And this is in a market where Dupixent, this is a blockbuster thanks to the likes of Regeneron and Sanofi, where they basically dominate. Before we get into the data, Todd, let's just start. What exactly is atopic dermatitis?
Eczema. So that's how most people know of it. So, it's a skin condition that's relatively common. It's autoimmune disease caused by inflammation. Symptoms include redness, itching, hardening, oozing, and crusting. It's pretty common. It affects about 10% of adults and up to 20% of children worldwide. So because of its size, it is a blockbuster indication. Right now, as you said, the superstar, if you will, in that indication is Dupixent, which won approval back in 2017 and is selling at a $2 billion per year run rate exiting the second quarter. And I think the sales of Dupixent had doubled in the past year thanks to some label expansions and ongoing uptake. So this is a very high value market for Pfizer to be targeting with abrocitinib. And the data itself, Shannon, I think matches up pretty good. It's solid. I mean, obviously we're going to get full data from there's multiple studies that are being conducted. So most recently, they reported the phase 2 results hit the endpoints, secondary and primary endpoints, and they're going to release more information into those trial results at an upcoming conference. Last week, they also did report, though, the full data set from the first of, I think there's 3 trials total, the first of the trials. And that data we can look at and say, okay, well, that also matched up. So maybe that's a good indicator of how the second trial did. And if you look at the response rates in patients, I hate to, because you can't do apples to apples comparison. You shouldn't with trials. It's not a head to head trial, but that's not going to stop anyone from looking at these results and saying, okay, well, if the response rates are significantly lower than they would be for Dupixent, then, why even bother? If they're significantly higher, then maybe, this is a good alternative to Dupixent. I think the results came in pretty much in line with what we saw at Dupixent during its trials.
Yeah, I agree. I think two things stood out to me in reviewing the data. And Dupixent and Pfizer's drug, I will say, have slightly different modes of action here. Dupixent, of course, already on the market, targets basically a protein IL-4 and IL-13, while Pfizer targets those plus one called IL-31. And IL-31 is the one that's really believed to be behind the severe itchiness. And this is where we're starting to talk about quality of life. And again, as you said, Todd, we can't compare this apples to apples because it wasn't a head-to-head trial. But, after 12 weeks, 57.2% of people on the 200 milligram dose, that was the higher dose, saw at least a 4-point improvement on the pruritus or itch scale, as I like to call it. And those improvements actually started within 2 weeks. If you look at the prior Dupixent trials, we were looking at 36%, 41%, and 59% for 16-week rates. I think this makes Pfizer's drug pretty competitive, especially when it comes to the itch. There was also something else that stood out to me, and it was the safety question marks. I think all in all, both drugs seem to be pretty in line with each other. But I think if there's anything that could hinder commercial viability, it could be the safety here. In Pfizer's trial, we did see 20% of patients who did have that higher dose experience nausea. There was also nasopharyngitis. That was an 11% adverse event rate, and also headache at 9.7%. And they did see a rate of serious adverse events at 3.2% in both the 200 milligram dose and 100 milligram dosing arms. And that was things like inflammatory bowel disease, throat infections, asthma, dehydration. I think if this drug gets approved, my question mark is just how much market share can they reasonably gain if they have a weaker safety profile, even if efficacy is pretty much the same across the board? With the JAK inhibitors in general, they all tend to come with some pretty hefty safety warnings. So it wouldn't surprise me to see this, but that is the one question mark that I have with this drug.
Yeah, the market's big enough for multiple players, and there's certainly going to be some people who don't respond to Dupixent that therefore, if this other drug was approved, they theoretically could get prescribed that, and vice versa. So I think that there's an opportunity for both of these, to be meaningful drugs. Like you said, as a Regeneron shareholder, the question you're asking yourself is, okay, well, Dupixent's really their fast-growing drug. That's really driving a lot of their growth right now, Regeneron's growth right now. How big of a threat is this? I think it's enough of a threat that you need to be paying attention, right? Because, Pfizer is not to be trifled with. They're a big company with very deep pockets. And obviously, they've got a very established marketing and sales department that can certainly get out in front of doctors and make a compelling case for trying it instead of Dupixent. So you're going to want to keep your eye on that. You're going to want to see the second trial. What those actual full data set was from that. We won't have that until, again, an upcoming conference. We only have the one trial, the first trial results to parse. So we'll take a look at that. Maybe we'll get back together and we'll update investors at that point as well, so we can keep everybody have tabs on this.
Absolutely. And don't forget, you've also got AbbVie in the mix with their own drug that is also being studied as well. But if all goes well, it looks like Pfizer could use the data from all of their trials to file for approval sometime next year. So a lot to watch in this space. I love when I see competition heating up, especially just with good science. But in terms of industry-focused healthcare show for this week, that'll do it for Todd and I. We want to thank you so much for tuning in. And as always, people on the program may have interest in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. This show is being mixed by Austin Morgan. For Todd Campbell, I'm Shannon Jones. Thanks for listening, and Fool on.